Good morning, everybody. It is Dennis, and we're back with Wednesday's video, going over how much we're getting paid on this great morning on Wednesday, the 26th, February 26th. So we have YieldMax ETFs tweet up right here, or X post, whatever you want to call it, with all the distributions. But we're going to go ahead and take a look, of course, at their article postings. As always, they actually wrote a little bit late on the X post at 8:10 a.m. while the actual article comes out at 6:55. Not sure why they were late today, but hey, whatever. We'll let them do whatever they want to do. So let's go ahead and take a look straight into YieldMax ETF as well. We're going to look over a Roundhill, and then of course an extra one actually for today. We're going to look at an extra dividend distribution for this week. But first, YieldMax it is. And of course we have all the weekly payers: QDTY, SDTY, no RDTY just yet. No Russell 2000 just yet being included, but we have QDTY, SDTY. QDTY paid us $32.31 per share. The return on capital is 100%, and of course that's all the payment date, ex-dividend date. We know all that jazz. We have SDTY, which is the S&P one, so we have the QQQ now and the S&P one. The S&P weekly ETF paid us $19.77, and that's a 44.79% return on capital. We have GPTY that paid $31.30 per share. This one's actually not that bad of a pair, but the value has been going down. But of course, we've had a market downturn, which we'll get into in a little bit, and that had 100% return on capital. We have LFGY. Another weekly, like there's so many weeklies. There's also dailies now apparently coming out soon, so I don't know how to feel about that, but so many weeklies now. That is paying $53.92, return on capital 66.45. We have YMAX, the beautiful YMAX, but not so beautiful this week at $13.27 per share. It's down this week, not that great to see. And our return on capital is 53.4. Distribution rate annually is technically 45.55, so that is technically good. It's high. It's almost at the 50% range, but still that distribution is low, and of course it's based on the current value of the stock or the ETF. So technically, yes, the percentage wise it's high, but actual like distribution wise it's kind of low compared to the previous ones, which you'll take a look in a second. YMAG. $17.60 per share, 53.55 distribution, 57.11 performed. YMAG actually performed better than YMAX this week, so that's been quite a trend recently. Seems like YMAX is able to pay out steadily compared to YMAX. Probably is getting a little bit help from other ETFs in different sections. Then we have NVDY that paid $1.6118. NVDY paying $1.6118, 105.43% return, 96.84% in return on capital. We have, of course, dips, the reverse of NVDY. We have 58.45, 62.49 distribution percentage, and 31.4% return on capital. Phoebe 47.67 with Phoebe 32.32% distribution rate. Not too bad, actually. The value stays quite steady with Phoebe, so it's not that bad of an investment. But return on capital 0%. GDXY is 44.24 per share. This is a gold mining one. I've been looking into this for a while, but I'm not quite sure how stable it is. And 37.26% distribution percentage annually, and 92.35% return on capital. We have Babo. So this is their Alibaba YieldMax ETF. It trades on Alibaba, not directly, of course, but the underlying, the synthetic is on Baba. And that is 115%, 115.03% distribution rate, and a 0% return on capital. JPMO, 29.51, actually a quite steady ETF. 21.21 distribution rate, but honestly, if you're going to invest into a 21.21 distribution rate, you might as well go into FEPI, AIPI, anything that's a little bit has more stability, as well as less risk than JPMO, and also offers you some growth. While JPMO, I don't know how it's been currently trending, but I know it's of course not safer than actually owning the shares, which is what FEPI does. And return on capital is 0%. MRNY 2308, 82.83% distribution rate. This one has been tanking YMAX. Everybody hates MRNY, but 82.83% distribution rate is not that bad. Of course, that is at the stock price currently, or at the ETF price currently. So if you bought higher up, this is not what your distribution percentage is. And ROC is 95.55. We have the good old Palantir PLTY paying $5.9377 per share at 111.13%. That is a 0% return on capital. And of course, then we have Morrow at $1.5575, 79.11% distribution rate, and 95.82 return on capital. The Palantir one is crazy, especially if you bought when it opened up. I'm pretty sure PLTY is up. If we take a look at the stock, PLTY on the 1 month scale, I think it hasn't even opened. Oh, it's been open since October, actually. But let's say you bought back when it opened at $45.96 at $50, right? Say you bought it back then, so your percentage on your distribution would be way higher. Especially, honestly, if you could have just sold here and pretty much 50% on your money almost. But if you didn't sell there, and then of course you would have received this crazy dividend of $5. Or is it? $5.9377, and that is based on the $70 price that is currently trading at. So if you bought at 50, then technically your return, your distribution per share would have been way higher than 111%. It would have been almost at, what is that, like almost 170%? We could do the math on it actually, but let's see, $4 or $5.937 times what is that? 12 months divided by you bought at 50. That's 142% return roughly. So 142% return, assuming you bought at $50. That is insane. Hopefully they're able to keep that up. I know Palantir has dipped, and we can see that on the actual graph that is dipped from 94 all the way to 71. But if they continue to pay high distributions, then I don't see why not. Am I going to be buying into it? Probably not. Okay, so we went over that. Out of all these funds, all these beautiful funds, we only own one this week, and that is YMAX. That's the only one we own for this week. Looking at YMAX, we are getting a low payment again, under $100 once again. Quite sad scene to see. For week 4, we added shares, almost at 600 shares, 1327 distribution rate, lower than week 2 at 15, and we're getting $79.58. That is 26.51% lower than the week prior. Sad sight to see, but what can you do? I don't control YieldMax, but I do control my own contract trading, which is why that's what I'm switching over into. But yeah, 26.51%. But if we do take a look at our total distributions and dividends for this month of February, we are at $1,155.06 for February. That is 13.51% higher than January. And as you can see, you know, all the distributions all together, YMAX came out to $386.25. And we got more distributions, 66.26 compared to 60.40 of January, even though that January had 5 weeks of distributions. So we still outpaced January with just distributions per share, even having a week less. And of course, with the yield that we receive. Compare that to, let's say, of course, December was a high yielding month, but we'll take a look at November, the one right before. We beat November by $1. So we are increasing, even with the market downturn, we are increasing our distributions from YieldMax. We're at $1,155.06. We're continuing to use the margin strategy of keeping cash, but using margin to reinvest into these ETFs and dividend distribution ETFs. So $1,155.06 is how much we're receiving in total, and YMAX contributed $386.25 in for this month of February. Now, let's take a look. Let's go ahead and put this back just in case we come back to here. But let's go ahead and go back to Roundhill, and Roundhill's distributions are out as well. They actually released it the night prior. So if you do want to know what Roundhill is distributing, just take a look at around 8-9 o'clock, and you'll be able to see they updated on their website before they even post it. So XDTE is 2032, QDTE is 25.95, RDTE is 1934, YBTC is 22.96, and YETH is their monthly $1.89. So how does that translate to our account or my account? Well, we take a look at QDTE week 4 of February. We're at 232 shares, or 0.3129 to be exact, and we received $25.95, the highest payment of the month. We had 23, 25, 24. Now we're at 25.95, so just slightly higher than week 2. And that gives us $60.29, 6% higher than the month or the week prior. And that gives us a total of $227.45. So not too shabby. We continue to increase once again, with having 5 weeks in QDTE. We still increased. We're close to even being to what we received in January of 230. We had 227, but of course we had low distributions in week 2 and week 5. And one high strong distribution in week 3. We also had less shares as well, so that's also contributing to it. But in general, QDT has proven to be quite strong and quite well at keeping its distributions at the same pace, at the same level. With the NAV, that's a whole different story. But of course, we're having a little bit of a market downturn. So, and also it's kind of staying flat. So QDT is not able to pick up on the nightly moves, since it holds no covered calls on the nightlies. It only does covered calls during the trading periods, meaning its lowered call is able to, or lowered synthetic is able to pick up all the growth on the nightly moves. Now, we know that the market has been down for this past week. It's down 2.22% currently as we speak. It is trending upwards today. It's up 0.68% today, currently at the peak of 0.73 as I'm making this video. And it's still continuing to seem like it's trending upwards, so that's good. Seems like the market might be recovering, or we may have a false recovery. For the month, it's not too bad. It's up 0.0 or down 0.04%. But of course, for the week, it does look quite bad. My account itself is down a good amount. As you can see, my buying power is still at 2,000, so we're holding strong and continuing to add cash. And of course, all the distributions we're receiving from YMAX and QDT will go into that cash pile. And the margin will go into next week's dividends ETFs. But I have an extra one for you guys today. I have SPY or SPYI from NEO. And they released their distribution as well today. They gave us a distribution of 51.42, and I don't know if a lot of you have SPY. I know some people, when I posted my SPY or SPYI. Let me say SPYI is better than SPY. When I posted my SPYI video, a lot of people said they do own it and run a similar strategy as well. So yeah, we got 51.42 from SPYI. How does that translate to my account? Well, we hold currently 30 shares of SPYI, and that gave me a total of $15.43. And you guys probably got a sneak peek over there of how much that equals to my dividend total. But we're not going to go ahead and scroll down just yet. That's going to be a video for next week. Once we do all our final trades with options, then you guys will know how much I made for the month of February. But SPY or SPYI is paying us $15.43 on the 30 shares that I currently hold on that 51.42 distribution. So that is all for this week. For the week B distributions, of course, it's kind of sad that I only own YMAX, but it's okay. It's okay. It's fine. How am I going to be using these funds? Well, I just mentioned before, we're just going to continue adding into our, cash pile. The $2,075 is going to go up to $2,200 after we add in the cash pile, or the cash we receive from the dividends. We're then going to take margin out on it, on that $200 that we're receiving, and go ahead and invest that into next week into AMD. Of course, the AMD has been down as well, and it continues to trend down, but I do see long-term growth in AMD, the underlying, so I will continue to lower my average cost into AMD with the dividends I receive, and just continue to do that. But hopefully the market starts trending upwards, higher and higher and higher. Hopefully we get back to greens instead of reds all over our accounts. Hopefully you guys aren't getting margin called. I know a lot of people have been talking about margin and getting margin called. Hopefully you guys aren't getting margin called. Hopefully everything is fine and dandy in your accounts, and you are receiving some great dividends from these ETFs. So let me know what you guys own for this week, how much you guys are receiving, how many shares you have. Just give me some deets on what you guys are trading, so I could go ahead and maybe take a look at it, and maybe based on your guys' opinions, I'll change my opinions. Who knows? That's the best way to do, right? To learn off other people. But thanks so much for watching. Thank you so much for for continuing to support, like, and subscribe. And I'll see you guys on Friday, when we'll be talking about a new subject, a new topic, a new ETF. Who knows? Who knows what it'll be? But anyways, guys, I'll see you guys on Wednesday.